Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. A heavy week in jobs data. We got more jobs numbers this morning. The market did not like it. Bob's going to break it all down for you. Let's dive in.
Trade Genius.
All right, Bob, give us a lowdown on the job situation here.
I know it's bad news today because yesterday I was your good friend, and today now I'm just an associate. So I think the market didn't care so much about the employment report today. I think what really unnerved them was the revisions down again in prior months. And I think the realization is that, it's like cockroaches, right? They just keep coming out of the woodwork on this. And remember, I said this about a month ago. I said that this fraud runs deeper. And then not just government now defrauding here with the data, and you can't tell me they don't know. Okay, you can easily just pull payroll reports and see the weakness and softness. But the fraud with the PPP, and I don't blame the statisticians for this because they saw a surge of new corporations be created. And then but they, one hand didn't talk to the other, and they didn't know they were, for the purpose of getting PPP loans and then leaving the country with the money, is that it actually inflated employment. And this whole thing now probably pushed the Fed to act later than they normally would have acted. And even though they knew too, because they even said that they think it's inflated, they should have probably started cutting in May. We thought maybe June, maybe even May, they should have started cutting, but they didn't do that. And now this is what we have in front of us. Look at this first chart. This is job openings, and they try to paint this over. And it just gets me so upset because they're trying to just fill us with government jobs. Well, that's all well and good. Okay, that there's government jobs, that private jobs are going away. But what they don't realize, you don't get any economic growth with government jobs. They're pie cutters. They're not pie makers. And when you're running a deficit like this, the only way potentially out of it, Phil, is productivity has to rise at a faster rate than the deficit that you're creating. And you don't get that with more government jobs. That's basically a short-term fallback position that just makes things worse down the line. And just to dovetail on that is that here's the private sector job running on fumes. Okay. What I didn't show you guys is that there was another chart showing foreign-born versus native-born people. Native-born job losses are in the millions, and you have foreign-born jobs gaining at 640,000. Now, I'm not making a political statement here. What's really happening is that you have a lot of people that were born in this country retiring, okay, and are leaving the job force. So some of it not voluntarily. They're retired below 65, and they're not getting new work, and they're hiring people at a lower rate. Because typically, there's two people that come to this country, either extremely highly skilled or no skills. And I think what we're seeing is a lot of these are very low-skilled people just taking any job they can get, and I think it's problematic. And again, government jobs were up. Full-time jobs were down over a million. Phil, part-time jobs were up. So we're basically seeing a addition fragility in the economy by the structure of the employment itself. The unemployment rate itself doesn't matter as much as what's happening underneath the surface here, and none of it's good. You can't point to any of it as being good. And I think the market finally just realized, like, hey, we're in big trouble here, so we better start ratcheting in lower economic growth, lower cash flows. And we don't know if the Fed is going to cut at a faster rate than they've already indicated. So the final chart here I'll throw up here and I'll give it back to you is that this is just showing the growth that's just been downshifting now forever. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah. So, I think, again, the bigger picture is that things are slowing as we thought they would. And it's just kind of, taking its time to turn. But one thing to keep in mind, though, is that, and the market didn't like the numbers today. Obviously, we're down a lot on Friday. But we are going into that weird window that we have when we go into OPEX, right? And all of a sudden you can catch a bid. So don't be surprised, even with all of this bearish data, that we do get a bounce potentially all the way up into the rate cut with the FOMC on September 18th, right? And you could potentially see a move beyond that as well a little bit. And then we're going to get into some very bearish seasonals going into October. And then you're going to get that pre-election rally. So those things are, I think, what can happen in this market. The market has been adhering to seasonalities pretty well. So again, it's kind of like you're having some short-term gyrations against really what's happening is the big oil tanker has finally started to turn. But that takes time. It takes a few weeks to a few months to finally manifest, and then finally you're in the throes of a bear market where you can't escape it. There's no more dislocation from the market action and market participants. Everybody's running for the hills and hedging, and that's where you're going to see the flows in the bonds and things like that. And it just sucks the wind out of equities. And you're going to see things like the NVIDIA high flyers, the Mag 7s, they're all going to get a dose of reality. And I think you're going to see some of the more spectacular Eiffel Tower charts, probably things we haven't seen since the 2000.com bust. So all of this is really a manifestation of what's happening in the economy. Jobs, they can fudge the numbers to a degree, but sooner or later, reality hits. And that's why I like household surveys too, Bob. I think we get that once a month or so. The next household survey is going to be very interesting to me because that survey's been hurting for a while. And I think it's going to continue to show us negative job growth in that respect as well.
Yeah, and a couple of final thoughts is one is there was a worry thing for me. I don't subscribe too much to conspiracy theories, but they did have the Trump sentencing for the same day as the Fed announcement coming out. And I'm sitting there, thinking, okay, that the market can't be happy about that potential. That got pushed off to after the election. So that worries off the list now, Phil. And I agree with you. The only reason why I'm not shorter than I am is because, you got the Fed meeting sitting in front of you here. And I don't know, if they're going to try to surprise to the upside. And with the VIX elevated, the thing is, the hardest thing to do is you don't want to short into a hole. Sometimes you just got to sit there and just be a punching bag for a couple days until that VIX releases, because the VIX can't maintain these levels for a long period of time. They're not designed that way. It's too expensive for people to hold on to protection. And then you get these snapback rallies that, may only be a couple days, but they're enough to wipe out anybody who got short. So with that, Phil, I'll let you go. A lot of people are talking about Bitcoin, Phil. A lot of people are worried about Bitcoin. A lot of people are worried about the Bitcoin derivatives out there. Let's talk about that tomorrow, okay?
Sounds good.
All right, guys. We'll see you tomorrow.
Trade Genius.